All right, let's get started. To approach the week, there's going to be a couple of different things that I think most traders can do and need to do. The first one of those things is very clearly going to be clearing your mind. There's headlines flying around everywhere. There's a bunch of people with a bunch of opinions. I'm saying people that were uh, talking about markets collapsing all of a sudden back on that train. I'm seeing people that seem to be able to predict the future, or at least that's how they speak, but their trade performance is nowhere to be found. When there's a ton of events out there, when there's macro events, when there's larger events happening, like with the stuff in Iran, you're going to get a lot of people talking a lot more. So tune everything out as much as possible. This is why you have to learn to do it for yourself. I'm seeing people that, you know what, let's do it. Let's read, just as an example. I'm going to read a post. Let's read one. You guys down for that? Oh, don't tell me they deleted it. I think they might have deleted it. Oh, no, they didn't delete it. Thank you. Okay. This guy says, bears like the words jackknife down. It gets them hot and sweaty on the weekend. Way better than suffering through a family friend barbecue. Jackknife down, so hot. Then he has a follow-up tweet that says, slamming the zero date put options on Tuesday open with a gif of someone being slapped. Then he says, that post implicitly means slam the zero date put button on Tuesday opening high if you want me to spell it out for you. That is financial advice. Lock me up. Now, here's the deal. This guy will usually, and this is how most traders do it, they'll come back and they'll say some smart-ass comment later like, oh, I was being sarcastic. I can't believe you guys actually did that. You're going to get a lot of that because, listen, the need to be right is a liability. Let's actually put that on our charts today. And I don't care if you figure out who that person is. What are they going to do? Fight me? I'll stomp their ass out. Like, come on. Literally and figuratively. And in a trading environment, trading scenario, I don't need to do those things. Did a little bit of 2021 SP come out right there? Maybe. That never changed. I just toned it down a little bit for the internet. But the reality is, again, best thing you can do as a trader is learn to do things for yourself. Okay. So that's what this is all about. And I don't want to be hanging out or hanging around the entire time. So let's make sure, or what I should say, I don't want this to be a long stream. So let's not take too long, but let's get some notes for the week. And this isn't really to teach anybody anything, to be honest with you. This is more so to just share what it is that I do and how I'm going into the week. So let's just make sure you keep that in mind. The need to be right is a liability. So when you start hearing a bunch of stuff from people saying this is for sure what's going to happen, or when you start to feel a little maybe uncertain about how the market is going to move, that's fine. As the week goes on, there will be moments where you start to realize this is a good opportunity, and you take that trade, you take that opportunity, and you move on from there. You don't worry about it. If it goes your way, great. You react appropriately. If it doesn't go your way, all right, fine. As usual, I'll start off with trade reviews of some of my trades. I'm not going to go deep into any of this stuff. I'm just going to talk about it like very briefly. There were some days, let's see, what's this? Friday, Thursday, Wednesday, Tuesday, Monday. One of these days I pivoted in the middle of the day. Then there was a day like this one where I tried to catch the bounce here. I think that was this day actually. And that did not work. And then I tried it again. I think I wrote about this. You can go look it up. This worked out great. And then I caught this trade. I keep that circled there because it was a good example of how there was one later day opportunity. For me, I'm going to trade mostly in the mornings. And I'm going to keep it to one trade. Maybe I'll trade some different stuff. Maybe I'll trade a little bit differently as the day goes on. Or maybe there will be times where I'll be better prepared, or I'll look to trade in the evenings, or not the evenings, but the late afternoon, maybe. But the reality here, again, for most traders, that everything that I'm talking about is intraday, morning session, no holding trades overnight, pivot when it appears that you are wrong. I mean, you don't have the PDT rule anymore. You don't have a reason to stay married to a trade. I just don't be afraid to maneuver. And all you got to do is don't get too comfortable with that rule being lifted. So don't overtrade. Just go into it. You need one trade. You need one setup. That's it. You don't even need that. You should really be building the skills necessary so that these conversations that we're having right now, you don't even need. But if I'm saying anything to you that sounds like something that you don't already do, just remember, this is all about preparing yourself for the moment. It's about preparing yourself for bigger opportunities. That's what you should be doing right now. It's the summer. It's chop. You don't even need to discuss most of this stuff right now. But anyway, that was one of those trades, or that was like multiple trades that day. I don't know what I traded here. Don't really care. But you notice there's a pattern, right? The market is pretty swift with the downside moves, and then it fades to the upside for the rest of the day. Same thing here. Swift, long-term trade to the upside all day. Swift move here. Yep. I did take this trade. I'm proud of this trade. That was a big trade. But market was knocking on a door, and it couldn't get through that door for a little while, and eventually, boom. And then you might be wondering, how's that blue line keep doing what it's doing? Well, that's the rangefinder, and I've already told you guys about that in the past. If you haven't watched older videos of mine, go watch it. That's what you should do. Okay. Now, I've gone and put the pressure rail with Friday's close, because that's the information we have available to us currently, here and here. This is a pretty limited range, and we know that because if we look at the money options for Friday's expiration, which is also those are monthly contracts here, 717, you can see the implied volatility at 10%. Now, I'm going to go out here on a limb and say, with the MOU, I'm so sick of talking about the MOU. I'm sick of talking about Iran. I'm tired of talking about Trump, to be honest. I'm tired of all of it. But it's part of the game right now. So, with all those things going on, all right, there's a good chance that implied volatility increases. So, part of your plan, or part of my plan, I can't tell you what to do with your plan, but part of my plan is going to be, oh, look, I did have my daily notes up here. These are some pretty good notes. All this still matters. So what I'm going to do here is I'm going to take this, just add an additional little note. I'll go ahead and copy that. I'll get rid of this. And we'll remove it, and we'll just add it to the list. And we'll add it to the top of the list, actually. The need to be right is a liability. Look for increases in IV after Monday's open. Like, things might get a little crazy. Markets don't know what to think of Warsh, but I mean, honestly, while this is true, it's a reminder that the rate conversation is actually a big part of everything else. So this is maybe a little redundant, so I'm okay getting rid of that. We know that the Korean market tends to, or has been tanking other markets. This is also a good reminder to don't hold trades overnight. Again, these are my notes. You do whatever you want. All right. So we got all these things here. This is all good stuff, right? And also, we can get rid of this now. I'm sick of it. Now we got a good little something going on. Something to work with. Something to start with. Turn the drawings off. What do we got? There are no patterns. There's nothing I want to draw on this chart. So you'll never see me draw like there's a triangle going on here, because I could draw one, right? Could easily draw a trend line here and draw a trend line here and say, yep, it's breaking out of that trend line, and it might break out or it might come back. That's silly. That's not how markets work. So don't worry about any of that. What I would say is we're close to the all-time high somehow. Remember how a long time ago, not that long ago, more like a few weeks, I was telling you that markets overreact to everything and it stops shorting into the hole, and then look where we are. I think the same thing remains here. I'm not looking for any kind of crash. I'm not looking for any kind of major correction. I don't think any of those things can be decided upon. It's summer trading. This is all about level to level. Can you survive the chop? Can you sit still? Can you take one trade and swing it? Can you take advantage of whatever without getting too smart for your own good, trying to predict whatever? Ain't it funny how right around here, when you got Michael Burry writing think pieces about how smart he is, dumbass, and look where we are 3 days after that. It's hilarious. It's good stuff. It's funny stuff. The markets will continue to humble you. So again, the need to be right is a liability. Stay out of it. We're going to talk about what setups might be available. Now, tomorrow in the morning, I will update these for the community or for the group in Telegram, Discord, whatever. I'll update this stuff and I'll write more about it. And during the morning streams, I'll talk more about it. But the best prep you can do right now is we're going to go to SPX, or we'll go to ES, see what has happened so far with the overnight session. All right, so not much, right? Not much. You got a gap down. You've recovered a lot of that. We're back here. So here's my plan. Let's disregard most of this. We'll say the gap down level is basically from that opening range. So I'll make a pivot. I'll mark a pivot spot or pivot point there. I'm actually gonna just use this level, this line. I'll make a new one. Bam, right there, right? So we'll just call this ES overnight pivot. It's the equivalent of what we see right now. All right, so we got that. Keep it in place for the time being. No need for this. And now we're working with a pretty clean chart and a pretty easy way of viewing the markets. How far we got to? We get to the all-time high right up here. Okay, great. Which is funny because look at that. The market is actually priced that in. It's preparing for it. That's the implied volatility from Friday's close. There you go. It's right overhead. That's actually pretty cool. Does that mean the market goes there? Not necessarily, but that's not my point. You could say the same thing about resistance here and the anchor rail from days prior. The way I'm going to approach this, pretty simple. There is no quote-unquote trade setup in place. But if we were talking about how markets have been moving, there's a few things I want to bring up. First one being that 30-year was elevated. Not at panic levels, but it was elevated. 5-year, same thing. About what we had come to expect. 10-year, same thing. Why is all this important? Well, because the VIX is below 16, and that's the thing that I think we really need to start addressing. Don't go buy VIX calls expecting for the VIX to pop. I think that's a horrible idea. But I will add is below 16. What has happened every time, or what has happened a lot of the time? This has been much like a launch pad. Markets can't stay calm long enough for this to stay down here. That's just something that has been the case. So we're on VIX watch. That's what I would refer to it as. I'm on VIX watch. This also means that, man, as much as I hate to say it, you probably won't see me unless it's momentum trades, very quick trades. You might not see me too excited to trade between here and here. This area, all this feels just a little dangerous. Now, again, this is my initial assessment of the market because I'm not a fan of how this traded to the upside. I'm not a fan of how this traded. I'm not a fan of how this traded. I was well aware of the reality, but if we look at volume even for these days, it was just okay. It was all right. It wasn't terrible. It didn't match the intensity of the sell-offs that we saw. But this has been the case, right? For a lot of this rally. Like, this is underwhelming. It's July trading. So I think the same thing applies as last week. If I wanted to trade to the upside, there's two things I would like to see first. First, I'd like a real sharp move to the downside first. I know this is different than the setups that we tend to talk about when I've streamed here to X and Twitch and wherever else you're watching this, but the flushes that happen are, they come from the issues structurally and liquidity wise. It's not spread out evenly. So the algorithms are going to rush and push money to certain places, and the market's going to overreact a little bit. You might be able to capitalize on that, as I did on Friday with this move down here. This was fantastic. But, and like the day before, those are the quick moves. But from there, markets tend to trend upward. So all I'm saying is maybe be patient and let that first move happen. Now, mind you, I'm sharing part of my trading edge. I'm not going to be doing this for you guys here on X for too much longer. I'm just letting you know that right now. Or we'll see how it goes. But if you're within our community and you are there in the mornings, I lay all this stuff out for you every single trading day, or exactly my thought process, and share my trades. So you know that I have a tendency to tell you when I think there's something ridiculous, quote unquote, going on in the market. I don't think that's the case. I don't think there's a huge difference between 760 and 755 from a number standpoint. If anything, the changes come from over here. We'll talk about this in a second. So level or levels to pay attention to, obviously. Sure, you got the previous day's high here. All right, great. No real big deal. Okay. I'll update the rangefinder as, actually, we can go into tomorrow. We can change the anchor rail right away. 13th. That is extremely low, 7.47. So that might even be a strategy for tomorrow as well. Absolute patience before jumping into anything. Could it be a trend day? Sure, but my experience with Mondays have been full of fake outs. Markets love to consolidate, trap, and then eventually give you one move and then erase that move. Again, just look at this previous Monday. So the close here. Actually, I think we already had that close there, but let's just make sure. I use 754.90. There it is. So let's mark those. 751.38. That's your range. Yellow, yellow, purple, purple. There you go. That's what you have to work with. And what is up with that? Oh, that's using after hours. All right. We don't use the after hours session for that. So we've got one pivot. Low of day, we don't even need to mark. We've got the overnight pivot here. So my plan essentially would be, if the market breaks the previous day's high, as well as the pre-market high, I look for price to pull back. However, this is where price action comes into play. You cannot make these decisions ahead of time based on which levels have been cleared. Right? Most of this comes from what you see happening in real time. That's still part of the game. I just want to remind you of that. As an example, when price was trading here on Friday, I don't even like trading on Fridays, and I went short. I was waiting around here with my short trade. Most of that had to do with the price action itself. That overrides everything else. That supersedes everything else. So yeah, it may have been above the pre-market high and the previous day's high, but I've got DMs asking me right now, I swear, how did you catch that move? It was in how it was trading. It was in the fact that it was trading apprehensively. It was trading in a way where it had everything it needed: major uptrend, gap down, recovery, trading above two pivots, trading above a 750 mental pivot. Right? It was above SPX 7500. You got everything you need, and it couldn't happen. There was something under the surface. There was something in the way. Boom, there you go. That is a skill I think intraday traders need to develop more than anything else. It may not be what you want to hear, but it's the reality. It's the fact. So if price is trading above that and trading above whatever the pre-market high is, it clears those two pivots. I mean, again, right now price is hanging out around here, so you're gonna wake up most likely to a gap down unless you get some kind of Trump post, which absolutely can happen. It's not that big of a gap. And if that happens, I think it's very dangerous to get in the way of this unless you can capture the momentum down. So you got to be prepared for it. And you also got to be prepared that the market will move against you dramatically and it will trend to the upside all day and it won't care about the put options that you have. This is where that risk management comes into play. It's extremely important. So remember, the need to be right is a liability. It's not about being right or wrong. No one is predicting what's happening next. It's about how you react to those things. You can make a lot of money from a small edge. You only need to win by a small margin. You just need to do it consistently. That's where the edge comes from. That's another conversation for another time. If you want to learn more of this stuff, if you want to refine your skills as a trader, you can DM me. But that's my plan. My plan is to be aware of where we are and say, I don't like trading up around here. I don't like trading to the upside up around here. I like the potential opportunities. If the market moves aggressively straight out the gate in the morning to the downside, that is, I'm not going to tell you what you should be doing. But once again, to me, even if that has broken the pre-market low, as long as it doesn't break its previous day's low or anywhere around here, as long as it's not hanging out around here, if price breaks down aggressively around here, I'm probably going to buy that, whatever that is, instead of trying to trade the continuation, as long as it's not news related. So any really aggressive moves, especially early, ones that the market hasn't really thought through in the middle of the summer, yeah, I'm going to look to buy that so that I can trade that to the upside. So let's see if I can jot that down in a way that makes sense. Idea: wait for flush before upside continuation. That is what we would call a failed breakdown. That's my idea going forward. Now that might sound a lot different than what you've been hearing from other people. If you go online, if I go on X right now, I'll find a bunch of traders talking about how it's the end of the world and gas shortage, and that's why we're going to have a correction and whatever. Listen, show me your profit and loss from the last month, the last 2 months. I dare you. Show me your profit and loss. If you are getting cooked shorting the entire time, you need to stop at a certain point. It's a disease. It really is. It really is. Markets overreact to everything. Stop shorting into the hole. If you could just eliminate, and let's actually jot this down. I'm allowing you to get some of my small account challenge notes. This is really important. If you eliminated all of your big losses, how much would you be up? That's a question you need to ask yourself a lot. It'll change your life. You don't need a bunch of big wins. You don't need a whole bunch of wins. You don't need to be amazing at it, right? What you need more than anything else is that. I'm giving you time to write that down. Now on to the next thing. The Qs have been leading SPY for some time. There have been times where there's a bit of a decoupling. I think the biggest issue that the Qs have, and I will use this in my own trading, like if I'm trading SPY, I'm going to look over here to the Qs and see what's going on. I want to see how this name is moving first. Tech names. I want to see how this is going. So get rid of that. I'm not going through drawing the rangefinder rails and all that other stuff right now because I will just do that at the open tomorrow most likely. But what I tend to look for is whether or not there's an area that's been cleared. And unfortunately for this name, there are a series of recurring resistances that have been in place. It hasn't even cleared this one, but if I wanted to clone it and just get another one, you got this one. And of course, you got this one. So it's got a long way till it's out of the woods, and that's not even the all-time high. I would very much keep this in mind because when this name gets rejected, especially aggressively, you know what it does for SPY. SPY takes a hit. So that's the other way I would look at this, is if SPY is slowly creeping to the upside, and just like on Friday, and it seems like it's a little apprehensive about making that move, and like on Friday, you can identify that there's some sort of area that it's struggled with in the past, like it was doing on Friday. And then you can look over to the Qs and see, hey, you're also near an area that you've had a tough time clearing, and you're still not able to do so. And you start to see Q make a move, or the Qs make a move that SPY isn't making to the downside. Then maybe I'll consider that short attempt. But we just need to be aware of what our limitations are. And I think those limitations might be hanging out around here. And if we look at this previous week's volume, I mean, the first one is obviously the gap here. It's the overnight pivot. This is the spot where I wouldn't short below this too aggressively. You might get continuation that direction. But if we look at where the volume was for the week, as you know, most of it is here. So this is good. This is great. I consider this to be a good scenario, plausible scenario, you know, short from here, plausible scenario, best case scenario. Anything below this, I mean, you're starting to get greedy, and, you know, I'll pray for you, but that is not the way I'd want to go about it. Same thing goes for trading this to maybe trading reversal. Let's say you don't like to trade to the downside. Okay, then here's how I would do it. First of all, if the market broke out above that pre-market high, I'm going to keep that in mind. I'm going to think, the market was able to clear previous day's high and pre-market high, by the way. It's able to clear a level that was previously important. I like that. But I'm not quite ready to trade to the upside given, you know, that we're close enough to the all-time highs. It might get a little dangerous. All right. Let's not forget, the market broke down from those all-time highs for a variety of reasons that they're not necessarily in play anymore. So what I would do is I would watch that breakout, and then I'd wait for it to pull back. And where would I wait for it to pull back to? Same thing applies. This is good. This is great. But this is ideal. This is perfect. Market's pulling back to this. This is the other side of what I just said. I'd love to be able to take the trade setup from here, from this general area. I'd love for the markets to bounce from here somewhere. So if you want, I'm not going to keep this on my chart, but if you want to, you know, you can put bounce areas like this. Watch for tests and retests, that kind of thing. And obviously, you know, you can say 750 mental pivot if you need this as a bit of a reminder. There was volume traded here. I consider this to be like a discount for continuation, as long as there isn't something fundamentally that has changed. If you try to do that same thing up here, it's okay. It's not the best entry in the world. It's all right. I mean, I guess some of it depends on if the pre-market low ends up being out around here and the market breaks that. Maybe get a little bit of quick continuation. I would just be patient. I would wait. You know, this is a good example. Look right here. Market had that flash move to the downside. It was fantastic. I closed my trade out down here. Then the market tried it again. Didn't work. Boom, you get this first candle. You don't have to catch this candle. If you trade to the upside, you can get this one. And then what happened? Get another rejection from that high of day, and you get another entry. You can take your time with these trades. You don't need to jump in at the beginning. I like to do that because I'm not patient. That's not true. I am patient with my trades, but when I have conviction or whatever in my trades, I tell myself, look, man, you don't know what's going on, so you don't need to have, you don't need to believe in the trade. Forget about what you think is going to happen. So, as you have heard me say many times, conviction will have you losing your trades. Don't worry about conviction. Don't worry about what you believe in or what you think is going to happen. Instead, focus on what the probabilities are. Probability of the market breaking out from here after this dramatic move, and it bounces and it makes a new high here, and it comes back, but this is a higher low. Well, you have a higher chance of this trending, and especially once it got here, you had another opportunity to trade continuation. I get it. Hindsight bias is 2020, but that's the thought process I would be using. And the same thing applies here. If the market makes some dramatic move to the upside, easy, early move, boom. And it pulls back. And the short side of things, the perma bears, if you want to call them that, the aggressive downside traders can't get any real aggression from here. And it's just hovering. I probably wouldn't go short. I'd probably stay away from that. I don't like my chances there. It's probabilities, especially when we've been hit with a bunch of negative news. I don't think there's anything positive that's been said. It's ugly. Yeah, that much is true. But markets have been extremely resilient, and this is how it tends to go in the summer. It may not be as positive as what we see in non-midterm years, but the returns for July have generally been positive. In other words, I would give it a 60-40 split in terms of tailwinds to headwinds. So then I come over to the Qs, I have a look, I say, all right, this will be my little cheat code. These will be the things that I keep tucked away. If the Qs, let's say, are trading a bit above this area and are hovering and hanging out around here, first of all, any strength in this name in general is going to have me looking at SPY, with a little bit more, if you want to call it optimism, or using that as tailwinds. Because this name has gotten hit up a lot. And not in a bad, not necessarily to the downside, but it's struggled to trade anywhere outside of this range. SPY has very much still been trading in much of a range, and you can't really see that on that chart. So let's take all the indicators off and just have a look at it. Let's take a step back one more time. See that? This is, you could draw a triangle if you want to, whatever. I'm just letting you know that triangle has no bearing on whether or not the market breaks out or not, or whether or not the market breaks out. So since it's been trading in this range, your best option is for one side to weakly move into, let's use a different word, to move into one extreme of that range, just like you see on my charts, constantly talk about trading extremes. Your best bet is to see one side make an attempt to move into that direction, move into one of those sides, move into either the extreme highs or the extreme lows, and then to do so weakly, do so in a weak fashion, do so in a way that's not sustainable, and then you take the other side of the trade. I'm just going to show you this one more time. Go through this previous week. Have a look. Before I tell you what I see, just take a second, ask yourself what you see. Do you see a pattern here? Water break over. The pattern I see is, so we can, all right, Friday, Thursday, Wednesday, Tuesday, Monday, great. This is just a trend up completely. Nothing you can really do about it, whatever. This day sucked. in terms of the pattern, right? It wasn't great. The next day, though, boom, moved down, end of the world. As you probably see me talk about with my streams constantly, I use, or if you're in the community, you see me label or name my streams the end of the world because I am making fun of people who are, talking about the market collapsing. Anyway, it moved down into closing a gap, as they say, whatever. This was very clearly support several times over. But anyway, it had its run. It looked ugly during that time, sure. But you give it enough time and it's not able to have that breakdown. And what happens? It clears a pivot and then it trades up. It fades up to the upside. Now, I went short here for this move down. This was great. The difference, though, is that this is after the recovery. See, once again, dramatic move down. They go too far. They can't hack it. And you get a reversal. They trade to the upside. They have everything going for them. They can't make it happen. And you get a reversal. All right, what's next? Dramatic move to the downside. And that has nothing to do with U.S. markets, but early move, boom, to the downside. What happens? They can't push it any lower. Supposedly the end of the world, but they can't get any lower. That's a trap by definition. What do you get? Upside move, easy. Next day, same thing. Couple of quick moves to the downside for sure, but can't do anything more than, can't even break the pre-market low. Easy trade to the upside. Nice. What do you get the next day? They can't quite get continuation early in the morning where there's the most volume's been traded. Nothing going for them. Can't make it happen. Boom, swift move to the downside. Only this side, I was in this trade. There's no continuation. And if you were there, I said, hey, look, as soon as this candle happened, I said, oh, that's it. I'm closing my trade out. It's done. Game over. I'm not sitting around waiting. I didn't even close half my trade first or nothing. I closed it out. I said, I'm out. Because this is an amazing trade. It's an amazing outcome. I'll say that. There's no need to try and force the issue. You get lucky like that, you call it a day. Okay? Remember, don't be greedy. Just remember, you can show up and do this every day if you apply what we're discussing right now. So anyway, this happens. And then what? Well, market came back pretty quick. And if you weren't quick on the draw, they let you out of the ride right here and right here. But after that, it's a wrap, buddy. They couldn't make anything else happen. It couldn't hold below pre-market low, any semblance of a pivot. There's nothing. It's no man's land. You want to stay away from that, okay? Especially if it's based on news or a tweet or a post or whatever. And then you get the fade. Again, this is why I give the 60-40 split to the headwind or the tailwinds in the market to the upside. That's just how it has been trading. This has been happening this way. Don't overcomplicate it. So all in all, that's going to be my approach. And then we can talk about some of the other factors that I consider. At times I will go look at how ES is moving, how, the international markets have traded, where oil is at. Yeah, oil has gotten a little bit of a boost. This is cool and all. I understand that. I hear you. Let me tell you, I would not marry the idea that markets will move aggressively. How many times have we seen the market move up and oil come down, even though there's supposedly an oil shortage? Gas is high. I get it. We've heard all this before. I don't know how much I'm going to factor that into my day trades. I think that's a trap waiting to happen. It can collapse at any reason, for any reason. Something to think about. Blue Box is also undefeated for SPX. But I think that's the best way to talk about this or to look at this in the summer. Really shouldn't be doing too much analysis in the summer anyway. But if you have to, that's how you approach these levels. Let one side make a mistake. Let one side get too aggressive. You can capture that aggression. You absolutely can. I like to do that because I don't like sitting in front of my screen all day. So I like to capture that aggression early, Let that trade happen. Then, once I'm out, let the market fade and do whatever the rest of the day. Maybe avoid trading Mondays and Fridays, Those can be tough. Mondays especially, because Monday, You probably need to be a little more patient on Mondays. Market's figuring out a whole bunch of stuff, right? So something to keep in mind. I've also talked about if the Mag 7's not going, I'm not going. That's the thing I say. If you hear somebody else say it, they stole it from me. Don't let them do that. NVIDIA. What is up with this chart? It doesn't look right. I guess it's because I don't have levels on it. Like, yeah, this looks weird. Usually, when I talk about the market being led by other names, so if we went to SMH, for instance, semiconductors, cool. I like to use NVIDIA just by itself. I'll usually come over here and I'll take a peek at NVIDIA real fast, and I'll say, if this is strong, then I know that SPY might have a chance. So maybe instead of 60-40, maybe it'll be 61-39, 65-35 at best, in favor of SPY moving to the upside. That's how I tend to look at it. Like, what the larger names in the market, what are they doing? How are they contributing to this, ETF, or how are they contributing to the indices moving? Same thing goes for Microsoft. I think this is a great way to get a little bit of an edge, just a tad bit, because I don't like trading these names individually. So I will look to Microsoft and NVIDIA specifically, and sometimes Apple. I'm not giving away my whole edge, so I'm not going to sit here and tell you about all the things that I factor in or consider here, but Apple is also sometimes a safety trade. So I don't look for Apple to be strong on the days SPY is strong and say that's my reason for trading to the upside. There are days where Apple can move up and other names can take more of a hit. That's the reality. Now, the one thing we got to come back to after I've said all this before I get off the stream, what is the thing that we got to remember? VIX under 16, I don't like it. And I got a feeling that's going to open up higher than that. But as we may also know, VIX tends to fade, right? That's been a recurring thing this summer. And not just this summer, but it happens often. VIX will make those early moves, right? It'll be terrible news, whatever. Don't forget, you still got a president who wants to see markets higher. And yeah, the initial shock, we're bombing this country and these people and we're retaliating and this and that, and open up the strait, you crazy bastards. I love that line. It's my favorite quote from Donald Trump ever. But, listen, yeah, give it a couple hours at this point. Give it a day or so. And usually that language will soften up a little bit, which is good. We want peace. That's what we want. We want resolutions. We want peace. What we don't want is the ridiculous amount of market volatility for no reason. So anyway, my point is VIX is probably going to open higher. And if it does, even if it does, what will follow that higher opening is you're going to see some increase in the implied volatility. And that implied volatility may be increased, which means you got to go into the range finder once again, adjust your numbers, adjust your levels, and realize that the range may expand a little bit. Once you have those levels, it's the whole point of this tool to begin with. Once I got those levels intact, I understand the range we're dealing with, I can define what extremes actually are. So once again, as a recap, notice how we're not talking about the macro picture too much. Let's go look at the economic calendar real fast. $13. Inflation numbers. Warsh presenting a monetary policy report. Yep. This all looks kind of bearish, most of it does. Except for, you got to remember, market doesn't care. The market doesn't care about inflation nearly as much as bears care about inflation. Don't let them project what they care about onto the market and tell you that it's a fact. Kevin Warsh has already said, I'm going to refer you back to the video I made on this guy. He's already said that AI is inflationary. It's going to contribute to inflation in some capacity. We understand that. But he is pro-growth. Therefore, it's a short-term taking a step back for a long-term thing that's going to help strengthen the labor market and create more jobs and eventually be better for the economy. And you know what the market hears when you say that? The market hears, hey, it isn't the end of the world. And that is the problem that perma bears have. They hear higher inflation and they think this means no rate cuts and therefore things are bad, and therefore, or this means no rate cuts and things are bearish. I won't say bad. But you know what I think the market hears is that, hey, it might, at some point, things are going to be up, and at some point, we'll be able to cut rates. Now, whether or not that means flooding the bond market or whatever, we don't know. I would say the yield, the 30-year, especially for growth sitting, that's long duration, somewhere sitting around 5% tells me that maybe markets don't know what to think. They're aware of the risks, but slowly they're starting to unwind that risk. They're slowly starting to unwind the fear that they had and rotating back into long duration growth and risk assets. And I think that's why we're seeing these kinds of trends to the upsides, because the market is slowly, right? Not aggressively, not the way that it was before. I understand that. It's not moving like it was before this. Like here, right? This was crazy aggressive. Market's not that aggressive right now. But they're slowly coming around to the idea that, hey, maybe this new Fed chair is not so scary, not so hawkish, not so spooky. There might be some short-term pain, sure, whatever, but the money is out there. And most importantly, the 90% who, or the 10% who hold the 90% of assets are not going to be impacted in some major way that should stop them from keeping the liquidity in risk markets. That's what this is beginning to look like. Now, of course, we won't really know until you get in the fall and everybody comes back from vacation and you get the midterms. Those things will change the game and change the picture a little bit. But the same skills that you should be practicing right now in the summer when it's, a little less or when it's inconsequential, these are the things that'll stop you from blowing up your account in the fall, because that's usually what happens. People will make money from a trending market in the summer, and then in the fall, it's all gone. And then they get all these opportunities in the winter, and it's like, oh, well, I wish I had done this. I wish I had done that. I'm going to start taking trading seriously. My kids are going back to school, whatever. And come on. Do the things that you don't feel like doing. I don't feel like streaming on Sunday. But being prepared, doing these kinds of things, they'll change the game for you. So anyway, as a recap, for SPY and for most names within, I shouldn't say most names. I'll say SPY and I'll say QQQ, maybe SMH. My general idea is that you can get short-term moves to the downside, but let them overplay their hand, let them overstay their welcome on the short side. Maybe you capture that momentum like I like to do, but then get the hell out the way. And I think that's going to continue to be the playbook throughout the rest of the month, actually. And it helps that, again, you got Trump telling you that he wants them, that he thinks the markets are going to go higher. I mean, come on. It doesn't hurt to have that on your side, right? Come on. And I know it says Trump's power to pump the markets has been neutralized, but that's true. We can see that. He's not able to send the markets higher just on whatever. But it's about his intent. His intent. That's what matters. We should keep that in mind. I also think trading 0 DTEs, 1 DTEs, maybe stay away from that, man. Like, I traded a 1 DTE contract, sure. That was that, it was on a Friday. I like to do that on Fridays. I'll trade, for a few days out, I should say. So Trump wants the market higher, maybe as a note we can add to that. So let's do that. But he wants markets, especially the old man market, the Dow. I'm going to ask you guys a random question. Have any of you played Assassin's Creed Black Flag back in the day? It's amazing, but They have the resynced version now, like the remastered version. Controls are a little clunky, but I'm looking forward to going back and playing that. So if it turns out that SPY is, let's say markets are choppy, that's what I'm going to be doing tomorrow morning. Yeah, I'm just saying, I'm letting you know that right now. I just felt like telling somebody that if you didn't know that I'm or was a gamer, getting back into it. I'm also moving into a new place relatively soon, so there will be some slight changes in my streaming schedule going forward. But, all in all, it's an exciting week. Maybe just be a little more cautious to start the week off. Don't let all the bearish talk get into your brain because it is poison, it is a parasite. Remember, perma bears don't make money. They just put money into the market and they write a book and they sell you on their Substack only. They'll never show you their trades. I've never seen a bearish trader show you or show me a portfolio of successful trades, or a perma bear, I should say. And I love trading to the downside more than I like trading to the upside. But if you can't look at the reality of the market, you can't separate that from what you believe is the reality of the economy, you're going to have a bad time. By nature, markets are designed to go up. Been saying that since around here. Go look at my post from April. Every time in April I said, hey man, I'm not a bull or a bear. Maybe, consider that it doesn't have to come down. Everything I'm telling you is true. But that's going to be my approach. Swift moves to the downside. Benefit of the doubt for the upside moves. Maybe this changes, like if you're in, Discord, Telegram, whatever, you'll see if I change my views on this. But this is how I like to approach the week. I will update the rangefinder rails on tomorrow morning, and each day, of course, as I tend to do. And as far as individual names, as I said before, I do not believe that there are good individual setups because much of the market is driven by what is happening with the indices more than anything else. Those individual names will change. Those setups will change. If you have something that you want me to review, send it to me throughout the course of this week. And if it's, if it's interesting, I'll have a look. And just to do my due diligence, I'll go around and see if there are any setups that look solid, right? I really do think that when it comes to trade setups, man, there is no such thing as something that looks solid just from the chart. Once again, imagine you had billions of dollars, okay? If it was as simple as looking at a chart, you would go get the best chartists in the world. You get the best technical analysts in the world, right? And you'd hire them on a commission. I mean, this is how it works. You'd say, I'll give you 2% of my portfolio and I'll give you 20% of what you get me on returns. And you'd have infinite money. You'd never have any risk because it would be based on the chart, right? There would never be another business you can get that kind of money in. The reason that doesn't make sense is because, or the reason that doesn't happen is because the chart itself is not going to do that for you. When taking risk and the things you have to look into, you got to be able to think. You need a trading edge. If you're an investor, you're also still taking on risk. All you got to do is look at each trader's performance. If you go on Telegram, Discord, whatever, look at my performance over the last 6 years. My numbers speak for themselves, but I'm also around every day. I show up every day. I'm here every day. I do what I do every day, even when I don't feel like it. I know what works for me. You can't copy what somebody else does and expect that you're going to have any real confidence in what you're doing. You're not going to have any true conviction in your process. You can build conviction in a trade from somebody else. Like I know someone right now trading MU. Just as an example. They get stock tips from somebody else, and they might be up on their portfolio, and that's great. And guess what, man? In 3.5 years, you're not going to have it. That's a fact. I would bet any amount of money on that. You ain't going to have it. Because if you're relying on somebody else to tell you what they think about another stock, guess what? You're just a sheep, dude. And rather than listen to so-and-so and what's his face, maybe, go give some money to Vanguard. Go get a professional fund to manage your money. Put your money on the line. Go for it. Go do it. But if you've made money from somebody else's opinions, I'm telling you, easy come, easy go. People don't like to hear that. This is the part of the stream where I say things that people don't like. As we move into the fall, you will notice me trade other names or swing trade other names. Another reason you should be grinding it out right now. You should be if you can't take an hour out your day and say, "Yeah, I'm gonna focus on building my skill set. I'm gonna show up every day." You're crazy. You're insane. This is like 2021. This is like your one opportunity. You get two opportunities now. Yeah, 2021. Now you got right now. You got a really good opportunity if you want to be a trader. I mean, have you not seen the markets go up and down? I mean, this is the best time to be a trader that I've ever seen. Outside of 2021, I will concede that. 2021 was nuts because, I mean, again, that wasn't investing. It was just gambling. It was easy gambling. But as far as trading goes, the only other time it's been easier than right now is 2023, where same thing. You had markets that were trending and didn't have a whole lot of volatility. It was still suppressed from the year before with the whole Barclays fiasco, but it's amazing stuff. Anyway, plug time. Versus the market is going to change the game and change your life. That is a fact. The tools that I'm using, even the trade setups I'm talking about, this ain't random. Come on, man. This is even the trade setups that I take, what I do, the way that I operate, it's methodical. If you learn this stuff and you exercise some discipline and just don't do something stupid every day, no offense to you who do stupid stuff, like trading a bunch of extra times throughout the course of the day after you made your money in the morning, as long as you don't do stupid stuff, you'll be fine. And yes, it is stupid. It's a dumb thing to do. And it might sound like I'm not being compassionate, but I'm telling you this so you can hear it from someone who actually trades and makes their money from trading. You'll realize what I'm saying is true. They're bad decisions, okay? If you look in the mirror and say, my choices are happening because of my reality is because of choices I've made. And I can have a different life if I do things differently. It will change your life for the better. I'm here because of choices that I've made, good and bad. As long as you can say that to yourself in the mirror, it will change something within you. I promise. I guarantee it. Because I've had that same conversation with myself more than once. And it's not easy to hear, but, look. I'm just telling you the truth. I'm telling you the facts. This is cool stuff. And, if you want to join us, send me a DM. If not, good luck and God bless and Godspeed. I'm going to go do other stuff now, but enjoy your week, man. Enjoy life. You're alive. You're breathing oxygen. You're breathing air. Your heart's pumping blood. It's fantastic. Things are great. Things are never as bad as they seem. And sometimes they're not that great, but they get better. You just got to power through it. You got to power through those moments. Do whatever you got to do. Brainwash yourself. Talk yourself into the fact that things are great until you actually believe it. And then once you believe it, you're unstoppable. What a blessing to be able to go to the stock market in the morning, making money from looking at your computer screen, man. Do you know how many people in my family and my life, right? They don't do this. They don't. They got to do other stuff to make money. And that's no knock to them. But I remind myself that I get to do this. And it reminds me how lucky I am. So let's keep that going. Keep that feeling going. Okay? It's an amazing thing, man. I'm grateful. Thanks for tuning in, listening in. And I will update you throughout the course.